Hi everyone, hope you guys are all having a great day today. The numbers did get released. I apologize, I didn't have enough time to look over them fully. And then didn't release on the usual spot, they released it on the press release. In terms of this earnings numbers, it looks like they beat in terms of estimates. The only problem is that in terms of guidance, I believe it's on the low side. So we're going to go over it. So for fourth quarter fiscal year 2025, I'm going to go over the highlights first. Then I'm going to do year-over-year, quarter-over-quarter comparison. Then look at the full fiscal year guidance, and then go over the outlook, and then go from there. And I believe there's some news usually. So in terms of, and then plus I have in the background in terms of what it's going to call the conference call. So if it does play, I could hear it. I'm sure you guys could hear it too a little bit. If they start up, I'll start it up, and then we'll go from there and then do a recap at the end. So for fourth quarter fiscal year 2025 fiscal year highlights. Total company revenue was 141.7 million. I'll zoom in a little bit more and I'll compare later on, but 141.7 million. Total company adjusted gross margin was 74% and GAAP gross margin was 73%. Total company adjusted EBITDA exceeded previously provided guidance at 21.1 million. QNX revenue grew 6% sequentially and was flat year over year, exceeding the guidance range at 65.8 million. QNX gross margin decreased by 3 percentage points sequentially and 2 percentage points year over year to 83%. QNX adjusted EBITDA beat expectations at 19.2 million or a 29% margin. QNX royalty backlog increased approximately 815 million in prior year to approximately 865 million. So we got about a $50 million jump. That's pretty good. Secure communications revenue exceeded previously provided guidance at 67.3 million. Secure communications gross margin decreased sequentially due to product mix to 64%. Secure communications ARR decreased by 3% sequentially and increased 3% year over year to 208 million. Secure communications DBNRR decreased by 2% points sequentially. One second. Oh, it looks like they started.
My name is Rob, and I'll be your conference moderator for today's call. During the presentation, all participants will be in a listen-only mode. We will be facilitating a brief question and answer session towards the end of the conference. Should you need assistance during the call, please signal a conference specialist by pressing *0. As a reminder, this conference is being recorded for replay purposes. I would now like to turn today's call over to Martha Gonder, Director of Investor Relations, BlackBerry. Please go ahead.
Thank you, Rob. Good morning, everyone, and welcome to BlackBerry's fourth quarter and full fiscal year 2025 earnings conference call. Joining me on today's call is BlackBerry's Chief Executive Officer, John Giamatteo, and Chief Financial Officer, Tim Foote. After I read our cautionary note regarding forward-looking statements, John will provide a business update and Tim will review the financial results. We will then open the call for a brief Q&A session. This call is available to the general public via call-in numbers and via webcast in the investor information section at blackberry.com. A replay will also be available on the blackberry.com website. Some of the statements we'll be making today constitute forward-looking statements and are made pursuant to the safe harbor provisions of applicable U.S. and Canadian securities laws. We'll indicate forward-looking statements by using words such as expect, will, should, model, intend, believe, and similar expressions. Forward-looking statements are based on estimates and assumptions made by the company in light of its experience and its perception of historical trends, current conditions, and expected future developments, as well as other factors that the company believes are relevant. Many factors could cause the company's actual results or performance to differ materially from those expressed or implied by the forward-looking statements. These factors include the risk factors that are discussed in the company's annual filings and MD&A. You should not place undue reliance on the company's forward-looking statements. Any forward-looking statements are made only as of today, and the company has no intention and undertakes no obligation to update or revise any of them except as required by law. As customary, during the call, John and Tim will reference non-GAAP numbers in their summary of quarterly results. For a reconciliation between our GAAP and non-GAAP numbers, please see the earnings press release published earlier today, which is available on the EDGAR, SEDAR+, and BlackBerry.com websites. Additionally, unless otherwise noted, the numbers John and Tim reference will be for continuing operations only. That is excluding the results of Cylance business, which are included within discontinued operations. And with that, let me now turn the call over to John.
Thanks, Martha, and thanks to everyone for joining today's call. This past quarter marked another significant step forward in what was a transformative year for BlackBerry. We closed the win-win transaction with Arctic Wolf for the sale of Cylance, and through solid execution by the team, we finished the year with another strong quarter that beat expectations across the board. Total company revenue beat the top end of our guidance range at $141.7 million. Revenue for the QNX division beat guidance at $65.8 million. Likewise, the Secure Communications division finished the year strongly, also beating the top end of guidance at $67.3 million. And finally, licensing had a better than expected quarter as well, beating guidance at $8.6 million. In terms of profitability, BlackBerry beat guidance for adjusted EBITDA, coming in at $21.1 million. And EPS, which includes discontinued operations for both the fourth quarter and the full fiscal year 2025, beat guidance and expectations at positive 3 cents and positive 2 cents, respectively. Then finally, BlackBerry's cash performance also beat expectations. Total cash and investments increased by $144 million, driven by a significant increase in operating cash flow to $42 million, and the collection of the initial tranche of cash from the Cylance deal of approximately $80 million. As I mentioned, at the start of February, we closed the Cylance transaction with Arctic Wolf. Last summer, the new management team performed a deep dive into BlackBerry's various businesses. And once we identified the financial challenges that Cylance was presenting to the cybersecurity division, and with it, BlackBerry as a whole, we moved quickly to find a solution. I'm very proud of the team's hard work that made this deal happen and close so quickly. At close, BlackBerry received approximately $80 million of cash and 5.5 million common shares. Additionally, BlackBerry retained its pioneering AI ML endpoint security patents, as well as tax losses that we expect will provide a significant shield for future profits generated by our U.S. entities. We were delighted that so many of our colleagues in the Cylance business were able to find a new home at Arctic Wolf as part of the transaction. With the deal successfully closed, we've switched our focus to fiscal year 2026 and beyond. We performed a thorough review of all aspects of the cost structure in our new Secure Communications division that includes UEM, AtHoc, and SecuSmart. This review aimed at refocusing the business more clearly on addressing its narrower, more common customer base, optimizing our cost structure in the process. The cost reduction actions of the past quarter build on others that we've executed over the past year. When we began this process, we said our target was to remove approximately $150 million of costs from our run rate, and I'm delighted to report that we've now exceeded that goal. As a result of this hard work, BlackBerry's profitability has transformed. Total company adjusted EBITDA was $39.3 million for the year when including Cylance, a $54 million improvement year over year when controlling for the patent sale in early fiscal year 2024. Let me now go into further detail at the divisional level. Earlier this week, QNX celebrated its 45th anniversary. QNX's leadership position in safety-critical foundational software cannot be replicated overnight. Instead, it has taken decades of working with the biggest names in the auto industry and beyond to establish the competitive moat that this business enjoys today. Notwithstanding the various challenges for the auto industry, the largest market segment for QNX, the team continued to drive results throughout 2025 and finished the year with Q4 revenue beating expectations at $65.8 million. Royalty revenue continued to be strong in Q4, albeit slightly lower sequentially, offset by the strongest quarter of the year for development seat revenue, while services remained relatively constant. Despite the delay in software development across automotive that have deferred both the start of existing and the award of new designs, QNX royalty backlog grew yet again year over year to approximately $865 million. The growth in backlog demonstrates that QNX continues to add future expected royalty revenue from new designs at a faster rate that is currently recognizing in the P&L. We believe this is a solid indicator of ongoing future health of this business. During the quarter, we continued to demonstrate our leadership in automotive by securing design wins with a number of leading OEMs and Tier 1 suppliers, primarily for ADAS and cockpit domain controllers. QNX is powered by strong multi-year secular tailwinds. We continue to invest in the business to capture these opportunities. This includes both driving go-to-market penetration, particularly in verticals adjacent to automotive, and bringing exciting new products to market that our broad customer base is asking for. Our next generation version of the QNX platform, SDP 8.0, and our cloud-based digital cockpit development solution, QNX Cabin, are two of these products, and both are gaining traction in the market. Another top 10 global auto OEM made a multi-year commitment to the QNX Cabin solution, building on wins with similar industry leaders in the prior 2 quarters. SDP 8.0 is also building momentum with significant progress across Q4, across automotive, medical, industrial, rail, and robotic verticals. As mentioned, we see significant opportunities outside of automotive. The QNX code base used in medical, industrial, and other general embedded applications is almost identical to that in automotive, meaning that we can truly leverage our technology investments across a broader addressable market. To help drive this growth, we recently launched the QNX General Embedded Development Platform, designed to accelerate the time to market for high-performance, scalable, and secure embedded systems. We are also building out our team, adding sales professionals to drive this go-to-market push. This past quarter, we secured several new logo design wins with customers in medical equipment, rail, and aerospace and defense. QNX is a leading brand in automotive, and BlackBerry is very much leaning into this brand as part of our efforts to drive top-line growth in fiscal year 26 and beyond. Going forward, the IoT division will now be referred to as QNX, more clearly reflecting the key driver within it. There was no better place to lead with the brand than at the CES trade show in Las Vegas, and the team did a magnificent job in making QNX shine with the booth sporting the bold new color scheme. We also showcased new product developments centered around helping customers shorten and simplify cycle and time to market. In particular, we highlighted the expansion of the QNX's vehicle platform. This vehicle OS aims to take the heavy lifting of integrating non-differentiated parts of the software stack off the OEM's plates, leaving them to focus on the application layer that their customers see and interact with. Leading Middleware providers TT Tech and Vector confirmed a multi-year collaboration with BlackBerry on this exciting new platform. We also announced a partnership with Microsoft Azure for SDP 8.0 in the cloud. This expands options for customers that already includes running QNX on AWS. Overall, 2025 was a solid year of progress for QNX in a difficult environment, consistently achieving or beating the top end of guidance throughout the fiscal year and continuing to grow the royalty backlog. Moving over to secure communications. This was another very solid quarter of execution for the division, despite a significant amount of time by the team that was dedicated to both Arctic Wolf transaction and the review of our cost structure. Revenue exceeded the top end of guidance at $67.3 million for Q4. In the quarter, UEM secured new business with a number of government agencies, including the U.S. Air Force, and a number of multi-year commitments with leading banks and law firms. Quarterly revenue for UEM increased sequentially. Year-over-year revenue for Q4 was down, however, partially as a result of a tough compare in the same quarter the year before, as a result of the upfront revenue portion of the large deal with the Malaysian government. Likewise, for the same reason, revenue for UEM for the full fiscal year was slightly lower as well. Speaking of the Malaysian government contract, this past quarter, we were delighted to expand our relationship, signing an extension to our existing deal that increased both the contract length and number of licenses. The Malaysian government remains a strong case study for deployment of the full secure communications portfolio and is one we are working to replicate. Ad hoc, our critical events management solution, also had a solid quarter and full year, with revenue increasing both year over year in Q4 and for the full fiscal year. This past quarter, we secured expansions and renewals with key U.S. government agencies, including the Department of Homeland Security, U.S. Department of the Treasury, and the U.S. Missile Defense Agency. SecuSmart, our military-grade encrypted voice and data solution, had a solid fiscal 2025, with revenue increasing year over year. Given the significant portion of upfront revenue recognition, revenue can vary from quarter to quarter depending on the timing of new deals, as evidenced by Q4 being sequentially lower. Annual recurring revenue, or ARR, for Secure Comms decreased by $7 million, or 3% sequentially, to $208 million, although it was up $6 million, or 3% year over year. The dollar-based net retention rate, or DBNRR, decreased marginally 2 percentage points sequentially to 93%, but was 2 percentage points higher than in Q4 of the prior year. Particularly pleasing is the continued strength in Ad Hoc's dollar-based net retention rate, which remains north of 100%. This past fiscal year saw a significant transformation for the Secure Communications Division, with both the sale of the Cylance business and significant restructuring to right-size the cost structure. That said, the team has remained laser-focused and delivered a very solid year with both reliable revenue, significantly improved profitability, and stable underlying metrics. Touching briefly on licensing. Licensing revenue came in above guidance at $8.6 million, driven by a stronger than expected revenue from pre-existing arrangements. For a year of significant change, I'm pleased that BlackBerry as a whole was able to maintain focus and deliver a solid top line of $534.9 million. As we move into fiscal year 2026, I am confident that the team will continue to deliver results. And with that, let me now turn the call over to our CFO, Tim, who will provide further details on our financials.
Thank you, John, and good morning, everyone. As John mentioned, revenue for QNX in the quarter exceeded the top end of guidance at $65.8 million and came in at $236 million for the full fiscal year. QNX gross margins in the quarter remained strong at 83%, and for the full fiscal year were 84%. Adjusted EBITDA in the quarter was $19.2 million, or 29% of revenue, and $59.1 million, or 25% of revenue, for the full fiscal year. Revenue for secure communications in the quarter was $67.3 million, or $272.6 million for the full fiscal year. Gross margins in Q4 was 64%, and for the full fiscal year 2025, 66%, both lower primarily as a result of revenue mix. Adjusted EBITDA for secure communications in the quarter was $12.6 million, or 19% of revenue, significantly beating the top end of the guidance range, with the division's operating expenses being $2 million lower than the prior quarter. Adjusted EBITDA for secure comms for the full year was 19% of revenue at $52.3 million, a stark comparison year over year from the cybersecurity division, which included Cylance, that had a significantly negative adjusted EBITDA in fiscal 2024. Secure communications is a solid source of both EBITDA and cash flow generation for BlackBerry as a whole. Finally, our licensing division delivered stronger than expected revenue at $8.6 million. Q4 adjusted EBITDA for licensing was $1.4 million as a result of the resolution of a legacy contract dispute that caused a one-time bad debt expense, driving higher than expected OPEX. The full year, licensing delivered strong results, with total revenue of $26.3 million and generating adjusted EBITDA of $15.8 million. The adjusted operating costs for the significantly streamlined corporate functions came in at $12.1 million in Q4 and $43 million for the full fiscal year. The costs were higher than expected, due primarily to a $3 million charge for revaluing deferred stock units, given the strong BlackBerry share price performance in the quarter. Pulling this all together, and primarily due to product mix, as I described, total company gross margin in the quarter decreased both sequentially and year over year. However, total company gross margin for the full fiscal year improved 9 percentage points to 74%. In Q4, total company adjusted EBITDA beat the top end of our guidance range at $21.1 million, representing 15% of revenue. For the full fiscal year, adjusted EBITDA for the total company, including Cylance, was $39.3 million. Adjusted net income, including discontinued operations for Q4, was $17.7 million, and adjusted EPS beat expectations at 3 cents. For the full fiscal year, adjusted net income, including discontinued operations, was $12.5 million, and adjusted EPS also beat expectations at 2 cents. BlackBerry exits FY25 in a solidly profitable position, a significantly different company to this time last year. A few points on the accounting relating to the Cylance sale. As John mentioned, at closing, we received approximately $80 million in cash, the first of 2 tranches, as well as 5.5 million common shares in Arctic Wolf. The shares are recorded at estimated fair value under accounting rules, the method of determining which can be highly judgmental for private companies. Our estimate is conservative, and we have recorded them at a value of 24.6 million. The second tranche of cash of approximately 41 million receivable next January will initially be recorded at 38.6 million in the books due to the discounting for the time value of money. This past quarter, the company meaningfully strengthened its balance sheet. Cash from operations was 42 million, significantly exceeding expectations, and $57 million better than in the same quarter of the prior year. In fact, excluding the patent sale proceeds in Q1 of FY24, this was the strongest operating cash flow performance since Q4 of fiscal 2021. Total cash and investments increased by 144 million during the quarter as a result of the Cylance sale proceeds and the strong operating cash flow to $410 million. This means that BlackBerry now has a solid net cash position in excess of $200 million. This healthy cash balance and a strong plan to generate cash in FY26 and beyond provides BlackBerry with significant optionality. Turning now to financial outlook for the first fiscal quarter and the full fiscal year. We expect revenue for QNX in Q1 to be in the range of 51 to 55 million, and for EBITDA to be in the range of 2 to 6 million. Due to the timing of auto programs, we typically see sequential growth throughout the fiscal year, with Q1 being the low point. For the full fiscal year, we see an uncertain backdrop within automotive. Given the recent tariff changes, and particularly automotive tariffs, like others in the industry, we are currently uncertain of the impact this could have on our business. While we currently don't see that tariffs will directly impact our products and service, we do expect some indirect effects on BlackBerry due to impacts to our customers, including supply chains and macroeconomic demand, although these effects are currently difficult to model. That said, because we work with almost all major OEMs across the globe, we are mitigated to some extent from US-specific impacts, given that approximately 50% of QNX's revenue comes from outside North America. Due to this uncertainty, we are reiterating the top end of our guidance range provided at our Investor Day in October, but expanding the bottom end, such that we expect revenue in the range of 250 to 270 million for the full year, or 10% growth at the midpoint. Despite this broader range, we continue to expect full-year adjusted EBITDA to be in the range of $55 to $60 million, or a 22% margin at the midpoint. We are taking a prudent view on the Secure Comms division, given the uncertainty in its core government markets at this time. This includes the potential impact of DOGE and other parts of the administration in the US, and changes in governments in Canada, Germany, and elsewhere. We're obviously tracking the ever-changing landscape, and while we haven't yet seen any material impacts, we're keeping a close eye on things. These changes could potentially cause disruption in the short term, but could also present opportunities in the long run through further consolidation of products and vendors. Given this backdrop, we expect revenue to be in the range of 50 to 54 million in the first quarter, and for EBITDA to be between 3 to 6 million. For the full year, we expect revenue to be in the range of 230 to 240 million. Currently, ARR represents a significant portion of this expected range at $208 million. Adjusted EBITDA is expected to be between $34 and $44 million, a 17% margin at the midpoint. Profitability for the Secure Communications division remains the top priority. We are increasing our expectations for revenue for our licensing division to be approximately $6 million each quarter, up from the prior $4 million expectation, with EBITDA of approximately $5 million per quarter. We expect adjusted corporate costs to be approximately $10 million a quarter, or $40 million for the full fiscal year. So, at a total company level, we expect revenue in Q1 of between $107 and $115 million, and adjusted EBITDA in the range of break-even to positive $7 million. For non-GAAP EPS, we expect it to be between -$0.01 to break-even in the first quarter. For the full fiscal year, we expect revenue for BlackBerry in total to be in the range of $504 to $534 million. Adjusted EBITDA between $69 and $84 million, with adjusted EPS between 8 and 10 cents. Finally, in terms of cash, as in the past, Q1 is expected to be a seasonal low for cash flow, driven by the billings and payments profile. Therefore, we expect an operating cash usage for Q1 in the range of $20 to $30 million. However, for the full fiscal year, we expect to deliver positive operating cash flow at around $35 million. This figure includes a number of one-time factors that decrease what would otherwise have been a stronger conversion of EBITDA into operating cash flow. The one-time factors, totaling approximately $20 million, include payment multiple years of already accrued corporate income tax in Europe, the ongoing cash cost of restructured facilities that we have exited but the lease hasn't yet expired, as well as the tail end of severance costs from actions taken this past year, particularly in international locations where the process takes longer. These impacts will gradually drop off as the year goes on, and the second half of this fiscal year is expected to deliver solid operating cash flow. In addition to operating cash flow, we will also add approximately $40 million from the second tranche of cash from the Cylance sale, meaning a further $75 million of cash will be added to the balance sheet this coming fiscal year. And with that, let me now turn the call back to John.
Thanks for the summary, Tim. And before we move to Q&A, let me quickly summarize the key takeaways from this past year. Fiscal year 2025 was truly transformative for BlackBerry. We identified and swiftly addressed the challenges that the Cylance business presented for the company through a win-win transaction with Arctic Wolf. We increased focus and external visibility by increasing the level of autonomy in each of our divisions and providing their EBITDA as part of our financial statements. And finally, we evaluated our capital allocation priorities, shifting focus to our core growth driver of QNX and reducing our cost run rate by more than $150 million. This transformation positions BlackBerry as a profitable, cash flow positive company heading into the new fiscal year. So let's now move to Q&A. Rob, could you please open up the lines?
Yes, thank you. We will now begin the question and answer session. To ask a question, please press star 1 on your telephone keypad. Please make sure your line is unmuted. Again, press star 1 to ask a question. We'll pause for just a moment to allow everyone an opportunity to signal for questions. We request that you limit yourself to one question and one follow-up. Thank you. And our first question will be from Paul Treiber with RBC Capital Markets. Please proceed with your questions.
Well, thanks very much and good morning. Just a question on tariffs and what you've seen or heard from auto OEMs. Can you just elaborate on some of the comments you made in your prepared remarks, and if you had any comments from OEMs in terms of changing production or other changes to new vehicle introductions as a result of the uncertainty around tariffs?
You know, at this point, Paul, we have not seen any material, any conversations that we've had with any of our large customers that said, hey, I'm seeing a real supply chain problem. We talk with them every day. We keep our finger on the pulse of everything that's going on. You know, as we said, I think a large part of more than 50% of our revenue comes from things outside of the U.S. So I think we're, you know, insulated a certain degree to this particular dynamic. But, you know, as you can imagine, it's a very fluid situation, but we haven't had any kind of calls of a significant call down in supply chain at this point.
Just a follow-up, just in regards to the overall uncertainty in the market, but looking at U.S. federal, can you just remind us again how large U.S. federal is as a percent of secure communications, and then just speak to if you've heard from any agencies either cutting seats or looking to cut seats at this point.
U.S. federal is a substantial portion. I would say probably 20-25% of our overall secure comms business comes with the U.S. federal business, and we have not seen any material impact. In fact, I think sometimes we certainly see some uncertainties where some of our renewals and our contracts, they were coming down the line and they decided to move forward with them because I think the nature of the products that we provide are secure, mission-critical communications. So I think they're very careful and cautious before they cut things like that. There's a lot of other waste and things for them to focus on. So another area that we watch very, very closely, but we haven't seen any material impact to that part of our business, primarily because the nature of what we provide to them is mission critical. And those are things I think they're a little bit more cautious about.
Thanks for that clarification. I'll pass the line.
The next question is from the line of Todd Copeland with CIBC. Please proceed with your questions.
Yeah, good morning. I had two QNX questions. Firstly, what are the OEMs saying in terms of how long it'll take it to work through adjusting to the tariff impact?
I think Todd, they're still navigating their way, quite honestly. So they're kind of taking direction from what's happening in the marketplace. Like I said, there's nobody that's kind of flagged, hey, we're going to have a material downtick in our overall supply chain and volumes throughout the year. But certainly the uncertainty of everything is something that has them on alert. Let's put it that way. But nobody, like I said, has raised the flag of a material downturn on it. It's just everybody trying to read the tea leaves on where this thing is going in the future and what the impact will be.
And in terms of your own guide, what have you assumed in terms of how long it'll take to work through the tariff overlay?
So what I'd say, Todd, is it's pretty difficult to model right now. I mean, obviously, we've broadened our range to reflect the uncertainty right now. We've kept the top end in line with what we presented at Investor Day back in October. We still see a path to that, but clearly there's some uncertainty. So we broadened the range a little bit. So yeah, right now it's a little bit difficult to model.
Okay. My second question relates to the 50% of your business that's outside the U.S. Could you just talk about those regions and what are the levers or drivers to that business in the coming year? Thanks a lot.
Yeah, I would say, Todd, we're bullish about the prospects and the momentum, the conversations that we're having with our customers outside the U.S. and obviously, quite frankly, inside the U.S. But this whole vehicle OS initiative that we're working with a lot of our OEMs, particularly in Europe, where they're looking for us to do more for them, how we can support them more, how we can bring more value, provide more technology and services. So I would say the conversations that we're having, with the industry in general, very robust, very strategic. We're at the center of what they are planning for strategically, and I think it sets us up for some interesting opportunities in the future.
And I just add to that one of the key focuses for this current fiscal year that we're going into is expanding beyond automotive. So we're investing heavily in what we call the GEM, General Embedded Market opportunity, which is adjacent verticals such as medical, industrial, this type of thing, which we see massive opportunity as well. So that's another way of continuing to diversify this business and expand the TAM, which obviously in a period of volatility is a good thing.
Thank you. The next question is from the line of Trip Chowdhury with Global Equities Research. Please proceed with your questions.
Thank you. I think you guys are really executing very well, like a startup. A year, lot of progress. I have two questions. Maybe it's more like a comment. Like if we look at everybody's talking about tariffs, and I think if we look and position BlackBerry as more like the new steel company, because if you look at the future, every vehicle is now software defined, and QNX is right at the center of it when we come to software defined vehicles. And they are pretty much a North American company. I think they're headquartered in Texas. So I think the effect of tariffs, if positioned well for QNX, could be a little less severe. That's one comment. And second, as Tim rightly mentioned, expanding the market of QNX to adjacent spaces is, I think, a very smart move. This is more of a comment because seems like robotics or physical AI is starting to gain some traction, and probably QNX can find its way because it's a real-time operating system into this new domain. Just two comments, and was wondering if you have any thoughts on it. And congratulations on really putting your heart and soul into making BlackBerry shine again. Thank you so much.
Thanks, Trip. Thank you for that. Those observations and the question. As Tim mentioned, we are leaning heavily into one of our big investment areas for the QNX business this year is in the GEM space, and we're seeing some real interesting pipeline and some real interesting opportunities coming our way as we take that SDP 8.0 platform, which requires very, very little modification to adjust and adapt to other segments of the market. So we've been investing in go-to-market. We've been investing in the brand. We've been investing in sales professionals on the ground, driving these relationships forward. So that's a big part of our plan for this next fiscal year, as well as managing and going up the food chain on our main segment of the market from an automotive perspective, where we're going deeper with our customers. So that's absolutely part of the plan for us in this coming year.
Very good.
Thank you. Our next question is from the line of Luke Junk with Baird. Please proceed with your questions.
Good morning. Thanks for taking the questions. Maybe to start bigger picture, John, hoping you could just double click on the vehicle OS initiative in terms of what you're seeing initially with OEMs in terms of scope. In other words, could it maybe expand the number of addressable models with a given customer or something similar to that? And then from a content standpoint, just your ability and maybe early learnings around what the content opportunity might look like relative to your current royalty opportunity per vehicle. Thank you.
Yeah, thank you, Luke. Thanks for the question. And both of those specific areas are places where we see opportunity. We consistently see a lot of OEMs trying their own thing on the software front, working with other platforms, looking maybe as Linux a solution, and then very quickly pulling back and coming to us and talking to us about how we can expand and help them on different models and help them as they plan for their future going forward. So I think that's whether that's in the U.S. or in Europe, we definitely see a lot of OEMs kind of coming back to us, asking us how we can help them do more. So that's certainly one trend that has been pretty consistent. The other is expanding our content as these vehicles. I know it's a journey as they put more content and more DCUs and more sophistication in the vehicles. That obviously plays very well to more instances of QNX in each of these vehicles coming out off the line. That's a trend that we only see increasing going forward. It's definitely a journey. I don't think it's a switch that they flip and suddenly you see the impact of that in the current fiscal year. But it's definitely a trend that plays to the strength of our QNX brand, our QNX capability, and the position that we have in the market.
Okay.
So if I could just add just a couple of comments on there. I mean, totally agree with all of that. And I would just add that this is an ask that's coming from the OEMs for us to do more. And to be able to take some of that heavy lifting of pre-integrating a bunch of undifferentiated parts of the stack, deep down in the stack on their behalf, this is something that they really want us to help with. And us for working with people like TT Tech and Vector to make sure that we get a really solid native experience. And a platform is something that really is going to help OEMs focus on the areas of the stack that they really need to be focusing on, and that's the application layer. And to your point about the content per vehicle opportunity, this could be a significant transformation. We obviously need to secure some of this business, so I want to just caution we're still in the early innings on this, but clearly if we're providing our components, our middleware components, as well as reselling some of our partners' components, that could be a significant step up in terms of content per vehicle.
That is all good color. We'll stay tuned and appreciate the additional color there, Tim. For my second question, just relative to DOGE risks and new administrations that you mentioned in a couple countries, just how should we think about either, I don't know if this is a major factor, cancelability of secure communications contracts across your various business lines, or maybe more importantly, just typical contract terms and materiality of renewals in any given year? Any just guardrails or rules of thumb we can think of? Thank you.
It's something, Luke, we watch very closely with all the dynamics that are going on. I would say a couple of things. A lot of our contracts with some of these governments around the world, they're long-term agreements. Our Canadian agreement, how we're positioned well with the German government, the U.S., and a number of most, I would say, of all of the U.S. is we're very much infiltrated and integrated and a sticky part of their mission-critical communications. So we do think it's unlikely that suddenly they're going to flip a switch and all of a sudden rip out some mission for the sake of saving a few dollars. In fact, if anything, I think there might be opportunities for us to consolidate because we play such a mission critical role. There could be opportunities to replace other vendors and expand our position with some of our solutions. So definitely a long journey, but I think the long entrenched, sticky relationships that we have with these governments around the world, I think are going to serve us well at a time where there's a little bit of unknown volatility.
I'll leave it there. Thank you.
Thank you. I would now like to turn the call back over to John G. Matteo, CEO of BlackBerry, for closing remarks.
Thank you, Rob. And thanks for everybody for joining the call. Very excited about the progress that BlackBerry's making and the transformation that we've executed on the past fiscal year. And we feel we're very, very well set up for future growth and future acceleration as we go into the next fiscal year. So thanks for your interest. Thanks for joining, and we'll see you next time.
This concludes today's call. Thank you for your participation. You may now disconnect.
Okay, hi everyone. So we're going to quickly go over the numbers. I could go finish off the highlights, but actually I'll just quickly finish off the highlights from what I left off of. What is it called? Full fiscal year finance. Or actually I'll just go over the numbers first, and then what I'm going to do, like always, is re-listen to a conference call after, go over the numbers again, and then do not a compressed video, but like a full detailed video of everything. But essentially I'm going to go over the big heavy hitter numbers and do a comparison, and then look at the guidance overall. Hopefully you guys can hear me. Just to double check 1 sec, sorry, just in case. Believe so. All right, cool, perfect. And yeah, no problem. Thanks again, guys, for the awesome support. Appreciate it. If you have any questions, I can still check them on the side, and then I'll go over the questions as well right after the numbers. So again, the number came in at 141.7 million, which is essentially good because it beat the guidance that they provided. So this was the Q3 during December 19, 2024, and they provided guidance for this quarter of 126 to 135 million. So they beat that. That is beneficial. I believe of the street estimates. No, not really. 1 sec. Let me just pull up the street estimates as well. I thought I had it pulled up earlier. Analysis. And then right now, currently the stock is at $3.16. $3.16 pre-market, which is unfortunate. In terms of street estimates, was about 132, 133 million. So they did beat that. There is some unfortunate stuff though, unfortunately. So we'll go over that too as well. The breakdowns I'll go through later on in terms of, or I could go with the Q next side. Yeah, I'll go later on for the breakdowns for that. But total company fiscal year revenue for fiscal year 2025 came in at 534.9 million, which is good because it beat their overall expectations of 517 to 526. So they beat the high end as well, so surpassing that. Except unfortunately for the street estimates, where is it? Right about here. Okay, yeah. In terms of street estimates, it was expecting about 548 million. So unfortunately, hypothetically, in terms of revenue, actually no, sorry about that. For the current quarter, it was 554 million. So quite substantial of a drop versus 534 million, so 534.9. So that is the unfortunate side of it. And then the expectations for the moving forward is 548 million for the full fiscal year of 2026. And I believe they have the guidance right about here. So in terms of guidance, hypothetically, you could argue that in terms of the overall full fiscal year guidance that they're providing is actually not that low versus what the street estimates are. So on the low end, it's 504 million, and on the high end, it's 534 million for fiscal year 2026 in terms of total company revenue, right? So again, 548 for the street estimates. So not too far off. The problem is in terms of their guidance for the next quarter for Q1. So for Q1 fiscal year 2026, the low end is 107 million to 115 million, which is kind of quite substantially low. Because if we look at, for example, last year's Q4, so last year's Q4, April 3rd, 2024, I'm going to do year-over-year comparison, quarter-over-quarter comparison soon. But in terms of their guidance, they were expecting 130 to 138 million for Q1, and I believe I have Q1 pulled up somewhere here. That was ended. We could pull up Q1 anyway right now, and they actually ended up getting 144 million. So, for example, their last year's Q1 guidance was higher. You could argue though, there was silence into the mix, obviously, right? So there has to be some adjustments. And then they did beat expectations last year for Q1. Even though Q1 last year was expected to be 130 to 138 million, they still got 144 million. So I'm expecting a beat. Usually they always end up getting the beats, so that's good. And you could argue they were more conservative for these guidances because of a bunch of things in the mix in terms of tariffs, uncertainty in terms of headwinds in terms of automotive sector, stuff like that. So technically, it is better for the long run to be more conservative, because at least if they were, for example, optimistic and expecting that nothing will be impacting us, that would be great for the time being in terms of share price and all that stuff. The problem is the impact of the stock getting knocked down for sure will happen later on, as opposed to now, technically get the hits right now. You could argue getting the hits right now is more ideal because everything's getting hit at the same time as well. So if everything's getting hit at the same time, you might as well get pulled down now as well, versus later on when, like, for example, everything's going up and you're getting pulled down. It's a mix, I would argue. It depends on how you take it, right? I'm sorry for the delay for the chat. I will go over the chat soon. But yeah, so there's that for that portion. So now in terms of, so again, just the biggest heavy hitters is the forecast that they provided for the Q1. It's quite low, 107 to 115, because the problem is you could argue that technically the growth is not 100% fully there, but again, the silence portion is taking out. But then if you look at the QNX side, again, QNX, they just rebranded it hypothetically in terms of the division name. It was previously IoT, now it's QNX. And you could look at the QNX side, but again, the automotive sector is taking a hit, and the expectations of that and the numbers are more conservative. And I'm going to go over it. I'm jumping a little bit over the place. But either way, 51 to 55 million for fiscal year 2020, for Q1 fiscal year 2026. Again, 51 to 55 million for QNX. So if you look at Q1 last year, and IoT came in at 53 million, right? So 53 million versus the guidance that they provided, it's pretty much flatlined. That's the problem. There's some of these numbers, and you could argue again, they're being conservative. They're going to most likely beat expectations, in my opinion. By the way, keep in mind, I do own shares in BlackBerry, so keep that in mind while you're watching this video. And I'm not a professional, so please do own due diligence and research before buying and selling. And I'm just going to recap basically the guidance for that they gave for Q1, full fiscal year guidance, and then I'm going to go over a little bit more details, but I want to catch up on the chat just in case if there's important questions that you guys are asking in unison, basically. So for the guidance that they're providing for Q1 in full, 107 to 115 million for Q1 in terms of total company revenue. QNX revenue, 51 to 55 million. Secure communications, again, silence is no longer in terms of that division. It's 50 to 55 million. Licensing revenue, approximately 6 million. QNX segment adjusted EBITDA, 2 to 6 million. Secure communications segment adjusted EBITDA, 3 to 6 million. Licensing segment adjusted EBITDA, approximately 5 million. Adjusted corporate cost, approximately 10 million, which reminds me, I want to go over also in terms of did they make a profit or a loss. There was something that Tim touched about. I think that's important as well to talk about, but I'll talk about that soon. Adjusted, I believe I read this in case, but adjusted corporate cost, approximately 10 million. Total company adjusted EBITDA, break even to 7 million. Non-GAAP basic earnings per share. Loss of 1 cent to break even. Operating cash flow usage, loss of 20 to 30 million. Again, they said, if I remember correctly, they're expecting a loss essentially for Q1, but overall for the year, about 35 million. So not much later on. They'll be cash flow positive. They will be cash flow positive overall for fiscal year 2026. I'm just not sure about how much each per earnings or each quarter. Then full fiscal year 26. Total company revenue of 504 to 534 million. QNX revenue 250 to 270, which again, when I'm going to go over the numbers, especially more in that detailed video, you'll see that these are pretty much flatlined for the most part, except for the secure communications obviously takes a hit. So secure communications revenue 230 to 240 million. Licensing revenue approximately 24 million. QNX segment adjusted EBITDA 55 to 60 million. Secure communications adjusted EBITDA 34 to 44 million. and then licensing segment adjusted EBITDA approximately 20 million, adjusted corporate cost about approximately 40 million, total company adjusted EBITDA 69 to 84 million, and then non-GAAP basic earnings per share about positive 8 cents to 10 cents, which is awesome. Operating cash flow usage approximately 35 million. And then I'm going to just, in case of the questions, again in unison, go to the perfect 10 shares. Oh, okay, yeah. Okay, so just in case, yeah. The reason they don't have Silence, they sold Silence to Arctic Wolf. The deal, they basically announced, I believe, end of December or sometime in December. I can't remember. But the deal was completed on February 4th, if I remember correctly. And so Silence revenue no longer will be in the mix. The positive though is the losses that they had in terms of Silence, that is kept with BlackBerry. So for example, when they make profits, the benefit is in terms of so when they make profits, they keep those profits essentially instead of paying taxes, because hypothetically those losses were paying taxes before in a way. But in terms of business sense, when you have losses, profits, you only pay taxes on profits, net profits, right? So that's the thing. So they get to keep the losses, so that's beneficial. They got shares from the deal, they got cash from the deal. Arguably so, you could argue they didn't get too much because they bought Silence, I think was for somewhere between 1.1 to 1.4 billion. I can't remember 100%. Plus they adjusted later on about a year ago in terms of what adjusted actual market value should have been, et cetera, et cetera. So, but at the end of the day, there's quite a bit of losses for that. So that was beneficial. Plus investment losses in terms of research and development too as well, you could argue. Doesn't matter. Alright, almost done. Okay, so in terms of fiscal years, so when they see fiscal year 2026, it's basically starting from, so this was Q4 reported, so it was end of fiscal year 2025. So basically go 12 months from, not 12 months from today, I believe the reporting ends on February 28th or 29th or something like that. So basically from February 28th, 29th, all the way till next year, February 2028, February 28th to February 29th date or something like that, like the last day of February basically. So there's that. So for fiscal year 2026, it's essentially from end of February all the way till end of February coming up, moving forward. So there's that. Now, in terms of these breakdowns, that's the full fiscal year guidance. Unfortunately, essentially flatlined. Again, the benefit is hypothetically the street estimates was not expecting much. So you could argue that's not too bad. Again, they are being cautious, you could argue. And then the couple things I want to go over. And then the Q1 as well, revenue is on the low side, but again, you could argue they're being cautious. I'm expecting a beat nonetheless, but here's one of the important stuff I wanted to go over with, what is it, Q4, is this the correct one? Nope, press release. Okay, so actually I could pull up, because I believe they refreshed this, yeah. So here's the actual official one. Again, 141, stuff like that. And then I'll go over the higher details and then highlights soon. I just want to go over the revenue, profit or losses for this quarter. So there was one unfortunate part that I saw, and then Tim went over it as well in terms of what's the hit. So in terms of the revenue that they came in, again, for this quarter, they reported 141.7 million. The problem is, at the end of the day, they reported a loss of 6.4 million. Now, Tim said, and I have to re-listen to the conference call to make sure, essentially, but I'm 99.9% sure there was a couple licensing things or some kind of contracts that they had to end, and because of that there was essentially like termination amounts that they had to pay. That is predominantly due to the expenses being up a little bit for the most part, and then therefore a loss for this quarter, which is unfortunate. But I believe there was quite a bit of loss during last year's Q4 anyway. So here's last year's Q4, April 3rd, 2024. If we look at the losses, it was quite substantial if I'm not mistaken. So it's not too bad. You could arguably say so. So yeah, so here's the revenue. Last year they reported 173 million, right? So it's a give and take. It just depends on how you dissect this whole entire thing. Because, for example, they made 173 million last year's Q4, right? So you could argue last year they beat this year's Q4 and there's a decline. But the problem is they reported $52 million in losses, right? So you'd rather have the, let me see, where is this the one? Sorry, it's just all over the place a little bit. Earnings Q4. you could argue, just to make sure this, just to show you, this is April 2nd, 2025, so this is the Q4. You could argue, even though they had 141 million in terms of profits this quarter, so it was less than last year's, or revenue, sorry, 141 million, 141.7 million for this Q4 earnings versus 170 something for last year's Q4. There is a decline in revenue, but at the same time, by the way, be mindful, Silence is taken out of this too. So who knows how much revenue would come in for Silence. You could probably extrapolate it, do potential growth calculations and all stuff and figure out an estimate, but essentially less revenue, which is unfortunate, but the total lost profits is actually less losses. So technically this quarter is better than last year's Q4, and came in at 6.4 million versus 50 something million, 52 million of losses. So there is pros and cons of the whole entire thing. It just depends on how you view it, dissect it, and then that's how you make your decision of what do you think this company is doing in terms of moving forward in a positive way or a negative way, hypothetically, right? That's why I always say do your own due diligence and research before buying and selling, because if you look at, for example, just strictly the numbers and the strictly the forecast that they provided, you could say, okay, then it's just flatlining completely and nothing's really being done. But then if you dissect it fully and look at the numbers completely, you could be like, okay, there is progress being made, there is promise being made, and then the numbers that they're providing is quite conservative, rightfully so, and then it is beneficial versus providing amazing numbers, spectacular numbers, which today they would be up hypothetically, but then you could argue with the tariffs coming in and all that stuff, et cetera, the market's going to get pulled down, and then that burst that they're going to have is short-lived, hypothetically, right? But again, be mindful. I do own shares in the company, so be aware of that while you're watching this video, right? Obviously that. Now, in terms of the highlights, I'm going to go over those. And again, I will be releasing a video in detail of going through the numbers completely, releasing to a conference call, providing the most key points, and going over the most beneficial things and sharing my opinions as well, and going through the technicals. Can't really go over the technicals right now for the time being, unfortunately, in terms of share price and all that stuff. So I'll go over the highlights first, just because in case you watched in the beginning, you don't want to hear the numbers again, just to make sure for the Q4 earnings numbers, and then I'll go over the Q4 numbers as a final lookout. So for the highlights, basically, if you're aware, you've known about a couple of stuff. So BlackBerry announced the successful closing of sale of Cylance endpoint security assets to Arctic Wolf. Microsoft and BlackBerry partnered to make QNX software development platform SDP 8.0 available in the Microsoft Azure cloud environment. That was actually a pretty good deal. And then I'm going to go over the chat soon, right after these highlights as well too. QNX extended its collaboration with silicon chip manufacturer AMD to support a wider range of adaptive computing devices used in robotic systems and other embedded devices. This was actually pretty awesome, just because they've already had a partnership for robotic side, but then they extended even more collaboration. So in essence, there's a lot of promise. It's just the promise. It takes time. That's the unfortunate part, unfortunately. The next thing is QNX, Vector, and TT Tech Auto announced a multi-year collaboration to develop and market a vehicle software platform that pre-integrates the QNX OS with other leading middleware components, which is good because these are big companies in the auto world in terms of Vector and TT Auto Tech, especially Vector from what I'm aware of. QNX launched its General Embedded Development Platform, GEDP, designed to accelerate the development of high-performance, scalable, and secure embedded systems. And then the next one was together with Intel and Cobalt, sorry for mispronouncing that company's name. QNX launched a functional safety FUSA platform built on advanced Intel Core i7 processors for advanced robotic systems. This is like basically you order what you want for the robots, and BlackBerry's within that mix as well. QNX partnered with Pi Square Technology to train software engineers across India as part of the QNX Everywhere ecosystem and expansion strategy. This is beneficial just because the more engineers that are aware or able to or familiar with the system, the more there's chance that the other companies will adapt it, because most of their engineers are capable of using that system, and the learning curve is less versus other software systems, right? The BlackBerry expanded its relationship with the Malaysia government, increasing the number of government employees that can use BlackBerry's suite of secure communications products. So that was pretty big contract before, so that was good. So, SecuSmart achieved certification approval from German BSI for its new SecuSuite for iOS solution, allowing it to provide leading encrypted voice and data on Apple devices to German government agencies. And then I'm going to quickly look at the chat just in case if there's like unison of questions. And then I'm going to go over the Q4 numbers in details that they provided. And then I think I might do, potentially if I have time, do quarter over quarter and year over year comparison, just quick glances. And then that'll be a wrap. And then again, I'll be looking at the numbers in details, re-listening to the conference call, hitting the key points, numbers, all that stuff, and technical analysis in the next video detailed on all stuff. So be on the lookout for that if you're interested. Just one sec. What do I think about the sell-off? The only problem is, let me see, what are we at right now? One sec. Yeah, it is quite a bit. Right now I'm looking at $2.94 US. It is quite a bit. And then plus the general market, let's just see, just in case. Yeah, the market is relatively about down 1%. So it is dropped quite a bit versus the market, obviously overall. Yeah, the only thing is though, yeah, it's quite a bit. I don't know. I would have to check everything in terms of technicals and all stuff. I can't really make a decision 100%. It is unfortunate. The numbers don't look, the problem is overall, it looks flatlined. It's not too bad. I would say, yeah, based off that, it's actually a little bit too much pulled down. Because essentially flatlined, unless somebody, from what I've stated, let me know if you guys see anything that's major negative. I personally don't see anything crazy negative. The only negative I would argue is flatline. But the problem is, if you, from what I stated at the Q4, the fact that it's last year's Q4 had way more losses versus this year's Q4, there is progress being made nonetheless. And there's a bunch of things that they're closing off of. For example, Tim stated that there's a lot of things that you can't just break it off now. So because of that, there's still costs that could be cut essentially in terms of like contracts kind of things. Like there's like penalties and all that stuff, whatever, et cetera, et cetera. I can't remember the exact details, but expect essentially those costs to come down as well more. So there is progress being made. And with that flat line, it's technically not a full flat line, if that makes sense. So there has to be a benefit for that. So that drop, what is it again? It was like about 20% or something. That is quite significant. I think the market is definitely overreacting. But again, that's just my opinion. So, and then I do own shares in the company, so be mindful of that while you're watching this. So don't take it for 100% face value. But comment down below if you guys saw something quite significantly negative, so that way I could bring it to light just in case. Yeah, okay, good question. Yeah, in terms of June, July, I'm interested to see how this is going to play out because last year, June, July, they stated that you'd be happy owning BlackBerry shares, which actually I could pull up right about here. So right now we're $2.92, give or take, about down 21%. If that is the case, I don't know how they are expecting us to essentially be happy with owning BlackBerry stock. You could argue you'd own it, but actually no, even then you own it at, let's say, $2.30, $2.50, because I think the share price was at $2.40 when they stated that. So this is not much of a jump to state that. So they have to be expecting something. Again, you could argue that the numbers they gave was quite conservative though. So maybe they're expecting some surprises if that's the case, right? We'll have to wait and see for that part. I'm just going to pull up the Q4 just in case, again, just to make sure this is the actual one. So April 2nd, 2025 right there. Yeah, actually, that's a good point, Raven. Yeah, actually, to be honest, yeah, okay, this is just a theory. But maybe you could argue, if I was running a company, the markets are going down, but I don't think they would do this, but it's just a theory. So the markets are going to come down. There's obviously headwinds with tariffs and the auto side and all that stuff. You do want to do a share buyback, right? This idea is just sparked from Raven's chat message, but basically you could argue that driving the price down now is a great opportunity. Like they foresee that you could do a share buyback with this at the best timing, right? With tariffs coming in, headwinds with the auto side, and you providing a conservative number, you're aware that this would bring the share price down, especially reporting at 8 a.m. instead of holding it to 5:30. Because I was expecting, in my opinion, that reporting at 8 a.m. there'd be some major either news or positive outlook, and none of those came to fruition, from my opinion. I don't know, from what I've listened to, right? I might have missed something potentially, but now this provides a great opportunity for a share buyback. Again, potentially, it's not a guarantee. So maybe that was the direction, because ultimately, if your numbers are conservative, and there's nothing wrong with the conservative numbers, because there's nothing devious about that in a way, right? Because you have to provide conservative numbers, because rightfully so, with all the headwinds coming in. And then you're going to beat those anyway. So technically, there's nothing being impacted moving forward, but then there's a positive to be able to provide share buyback, because they do have cash in hand. So, but that's just a theory. And again, I'm not a professional, so please do your own due diligence and research before buying, selling. And I do own shares in the company as well, so be aware of that while you're watching this video. And then I'm going to go over the numbers right about now, just to make sure a couple things. Yeah, so that exactly. Yeah, so Monty, exactly to Lit TTV. That's the thing. The problem is everybody was expecting basically better numbers. That's essentially, for the most part, just in case you guys are curious, where is it? Just make sure, April 2nd, 2025, right about here. This was, in my opinion, the biggest thing that I was expecting for. Right? I wasn't even expecting a low Q1, to be honest, though. That is a surprising, to me, surprising factor. The low Q1 is surprising, but I wouldn't say this is the biggest issue, because I'm always aware, in my opinion, that they always beat expectations. So I'm not too concerned about this. I'm more concerned about this. But again, you could caution it with the conservative numbers that they're expecting because of the headwinds, tariffs, auto sector headwinds as well too. But I was expecting this full fiscal year guidance for revenue for 2026, so the year coming up, I was expecting this to be higher. That was the unfortunate part. So for example, if it came in at 600 million, I was hoping more than 600 million before, but then when I looked at the outlook that they provided, if you guys remember my last video in terms of update 2.0, they provided somewhere between 620 to 650 million, I believe it was, in terms of guidance, but that included Silence. But then if you took out Silence in terms of revenues, adjustments, and all that stuff, I came up with a number of 530 to 560 or 520 to 560, I can't remember exactly. And if they provided even 560, that actually would have been good. On the top end, you could argue. Let's just say they provide 530 to 560, then that actually wouldn't be too bad. The Q1 numbers would have still hit us, though, with the, just to make sure you guys know what I'm talking about. The Q1, this one, fiscal year 2026, this is quite low, so this would still hit us. But if they came up on the high end of 530, then what would have happened was they would have beat the street estimates guidance of 548, and they would have, technically, what was it? I believe it was year-over-year growth too, but I have to go over the numbers again, something like that, because what was it? Yeah, I would have to go over the numbers just to double check. I can't remember if it was 100% year-over-year growth, but it was actually a reasonable number given the silent. Oh yeah, that's what it was, I think. It was a sale of Silence too, because you have to take out something from that overall. So I think it was not too bad. The problem is they're not really touching 560 or 550, so therefore, in a way, not beating the analyst expectations. They're going to beat this 550 in my opinion, because they beat expectations usually, but at the same time, analysts don't look at that 100%, I think, in my opinion. They don't look at that like in terms of they usually beat guidance, and therefore it's like we should not worry about the number we're providing versus the number they're providing. No, well, this, you have to take it essentially for face value, basically, right? So there's that. And then yeah, they could always adjust. That's the thing. They always adjust in terms of the numbers. We've seen, I could pull up Q2, Q3, I believe. Q2 right about here. Let me see. They had the guidance as, but it depends on what happens, right? Just quickly, and I'm going to go over the Q1 numbers right now, pretty much in like about a minute. So Q2, they had 591 to 616 million, right? And then for Q3, they adjusted it. So quarter after quarter, they adjusted it 517 to 526. So they do adjust it. Not all the time, but they do adjust it. Now, just to go over the numbers fully. So for Q4, again, April 2nd, 2025, just going to wrap up and give the final numbers and then go from there. Again, be on the lookout for the full detailed video. Hopefully it's probably going to take about a week for this one because it's quite a bit. but it should be jam-packed, definitely jam-packed with a lot of information, technicals, numbers, conference call, key points, all that stuff. So total company revenue came in at 141.7 million. Again, they reported about a loss in terms of this quarter. Again, from what Tim stated, essentially basically payouts for the contracts eliminations or something like that, licensing eliminations. It was a loss about 6.2 or 6.5 million or 6.1 million loss. I'm going to go at the end and show again just to confirm with you guys. But a total company adjusted gross margin was 74%, and GAAP gross margin was 73%. Total company adjusted EBITDA exceeded previously provided guidance at 21.1 million. QNX revenue grew 6% sequentially and was flat year over year, exceeding the guidance range at 65.8 million. QNX gross margin decreased by 3 percentage points sequentially and 2 percentage points year over year to 83%. QNX adjusted EBITDA beat expectations at 19.2 million or a 29% margin. QNX royalty backlog increased approximately 815 million in prior year to approximately 865 million, which is good. But the problem is I need to look at the percentage, not percentage, but like comparisons of previous time frames, growth, and all that stuff. It is good. I just don't know how good it is. That's the only problem. Again, I'll provide more details in the next video. Secure communications revenue exceeded previously provided guidance at 67.3 million. Secure communications gross margin decreased sequentially due to product mix to 64%. I'm assuming obviously this is predominantly the removal of silence, right? Secure communications ARR decreased by 3% sequentially and increased 3% year over year to 208 million. Secure communications DBNRR decreased by 2 percentage points sequentially and increased by 2 percentage points year over year to 93%. And then secure communications adjusted EBITDA exceeded previously provided guidance at 12.6 million or a margin of 19%. Licensing revenue exceeded guidance at 8.6 million and licensing adjusted EBITDA was 1.4 million. Adjusted corporate costs were 12.1 million, sequentially higher due to okay, so that's interesting. So I'll read the thing and I'll share my thoughts. So adjusted corporate costs were 12.1 million, sequentially higher due primarily to an upward revaluation of deferred stock units following strength in BlackBerry's share price. Oh, okay, no, never mind. I thought this was something else. Adjusted net income was 17.7 million and GAAP net loss was 7.4 million. Adjusted basic income per share beat guidance at 3 cents. GAAP basic loss per share was 1 cent. Operating cash flow beat expectations and improved by 57 million year over year to 42 million. Total cash and investments increased by 144 million sequentially to 410 million, in part due to the improved operating cash flow and in part due to approximately 80 million received from first transaction, supposed to be, I think, of cash from the sale of Silence to Arctic Wolf. And then this is the full fiscal year 2025 financial highlights. So the whole year that just passed, total company revenue for the full fiscal year was 534.9 million. Total company adjusted gross margin and GAAP gross margin were 74%. Total company adjusted EBITDA for the full fiscal year exceeded previously provided guidance at 84.2 million. QNX revenue for the full fiscal year grew 10% year over year and hit the top end of previously provided guidance at 236 million. QNX gross margin was 84%, and QNX adjusted EBITDA increased by 76% year over year to 59.1 million, or a 25% margin. Secure communications revenue for the full fiscal year exceeded previously provided guidance at 272.6 million. Secure communications gross margin was 66%, and secure communications EBITDA was 52.3 million, or a 19% margin. Licensing revenue was 26.3 million, and licensing adjusted EBITDA was 15.8 million. Adjusted corporate costs were 43 million for the full fiscal year. Adjusted net income for the full fiscal year was 12.5 million, and GAAP net loss was 79 million. And then adjusted basic earnings per share for the full fiscal year was 2 cents, and a GAAP basic loss per share of 13 cents. And again, just to show you the revenue for this year, for this quarter, for the Q4, was a loss of 6.4 million. But again, it depends on how you interpret this. Even though the revenue was 141.7 million, so less than last year's, this is last year's Q4, April 3rd, 2024, is less than last year's 173 million. 173 million for the quarter, but the last year's losses was 52 million versus this year's 6.4. So there is progress being made. There's that. One sec. And if you have any questions, ask them down below and I'll answer them. But in my opinion, given all this, essentially, key takeaway I would say, it looks flat, but there is progress being made because at the same time they're keeping more cash overall. Hypothetically, I know it's still a loss though for this one, but they had a profit last quarter and all stuff. And essentially for the fiscal year, it was profitable. And then in terms of next year's fiscal year, it will be profitable, even though Q1 is what is going to say? Q1 is going to be in a loss reporting. I believe it was 20 to 30 million that they stated for the outlook. Yeah, lost 20 to 30 million, but overall for the year, approximately about 35 million. So it looks like it's flatlined, but there is progress being made if you look at the underlining overall. And then you could argue these numbers are conservative, and rightfully so, with the tariffs and auto headwinds. So given that, in my opinion, I believe the market is overreacting personally. But this is just high level looking at everything, and then I might have missed something in terms of negative potential from what I covered. Even though I read it, I might have missed it as being a negative. So if you guys have any questions or anything to clear up, let me know, and I'll try to clear up as much as possible right here. And then one of the positives is potentially this could provide a good opportunity for a share buyback, personally, from what Raven mentioned in terms of tax. Raven in terms of the chat. One sec. And I'm just going through the chat. Again, if you have any questions, let me know. Yeah, that's the thing. Like with BlackBerry, there is a bunch of potential, but they have to obviously capitalize on it. And you could argue they are, but it's taking time. No. So they had for Q4, it was $52 million in losses, 52 or 53 maybe. And then this quarter, it was, this Q4 quarter was 6 million, 6.2 or 6.4 or 6.1. Can't remember. Short memory it looks like. But that's for this Q4 comparison. So there is progress being made, even though the revenue was at a decline. But again, Silence was removed from it, right? That's a thing too. Like that 141 or 140 million, 141.7 million, I believe it was, versus the 173 million last year's Q4. There's Silence removed from this one. The losses, so they had losses, but they're also expecting losses. This is specifically to LTTV comment. They're expecting $23 million losses for Q1, right? Losses for so the revenue is coming at 107 to 115 million, but out of that revenue, they'll have reported losses, not profits for the Q1, right? So there's a bunch of things they have to consider. Again, this is on the low side. There will be losses reported. The guidance is pretty much flatlined for the most part. I have to do full comparisons, but I'll do that in the next video. But essentially, it's just like the earnings is okay, but it doesn't seem like that much progress, hypothetically, unless you look at the underlinings and then adjust for your expectations, so on and so forth, and then be aware that most likely these numbers are pretty conservative based off the headwinds. But again, I'm not a professional, so do your own due diligence and research before buying and selling. And I own shares in the company, so make your own opinion in a way, because mine could be biased easily, right? Naturally, right? That's the problem. I try to not be as biased as much as possible, but naturally owning shares, you could be obviously biased in one direction. Yeah, there's a potential for, but the problem is with the IPO thought, I don't know if they'll necessarily go down that path. There is a possibility always, because they're always changing in terms of division and readjusting the divisions, that maybe they're trying to cater to that avenue with the IPO portion. There is a possibility, especially with QNX, how it's moving forward overall. I just don't know if they're the thing is though, their mindset from what John Giammatteo seems like it is they're improving as much as they can in terms of divisions, adjusting things accordingly, and if the opportunity ever arises to move to do a move for, like, in terms of direction that is profitable for the shareholders, essentially they'll take it. So if they see this as a beneficial move in terms of IPO for one of the divisions or something like that, and they see that it's truly actually beneficial, they will take it. It looks like they won't be hesitant, but it has to make sense, essentially, right? So that's the only thing. but in the past they were trying to do that, obviously, but they stopped that direction, and then it essentially doesn't make sense right now, it looks like, for them. And if it does in the future, I'm pretty sure they won't hold back, because from John G. Mateo, they take advantage of whatever makes sense at the time. And then thoughts moving forward. It's like, essentially, in my opinion, this is just high level though, because I have to fully look at everything completely. I think the market overreacted, because if you look at the underlining, if you look at it face value looks flat, which is unfortunate. So you basically wait and see still. So wait and see phase. But if you look at the underlining, I personally could see progress being made. And given that, and knowing that they beat expectations, and given the headwinds they had to be conservative, I think the market overreacted, and this would essentially be accumulate, especially given how we were at $2.50, $2.40 kind of thing, and we bounced back up. And I think the market pretty much knows that's the low side. We're pretty close to that level anyway. But again, I have to look at everything in details. But essentially, I think the market overreacted, and it shouldn't be this hit this much. It's just too much, in my opinion. But again, I do own shares in the company, so be aware of that while you're watching this. Being sold outside. Yeah, in terms of the vehicles overall, I think they didn't really touch base off of that, Tony. But essentially, they said that they were getting hit, but not too much overall. But I have to re-listen to that portion, unfortunately. Yeah, it jumped up to 322 or something like that, and 310 right now. But overall, in my opinion, I think it overreacted. Supposedly, yeah. See, that's the thing. Yeah, Tony. Yeah, for overall, their systems are doing well in terms of adaptation. Again, they are in 24 out of 25 EV vehicles, and at the same time, in terms of their systems, it's not specifically just EV, right? Like, for example, if you guys remember BlackBerry Ivy, if ever it gets fully adapted, that's not supposed to be only for EV vehicles. That's for all vehicles. So BlackBerry Ivy was basically communications from vehicle to vehicle, sensors and all stuff, et cetera, et cetera. And the benefit of that is the fact that it's not just EV, it's all vehicles, ICE and all that stuff. So them being adapted is great. And at the same time, the growth reach is phenomenal. Just the problem is traction needs to be made. And they are making adjustments, but just for the time being, it's like headwinds, so on and so forth, and wait and see kind of progress. But that's basically it. I'm gonna have to let you guys go, unfortunately. Again, be on the lookout for the full detailed video where I'll go pretty much full breakdown on the numbers, breakdown on the conference call, key points, and technicals. Thanks again, guys, for watching. Appreciate the awesome support, and I'll catch you guys in the next stream. Take care. God bless and peace.